When I say hard landing, that is given the Fed's current stance. If the Fed, cut interest rates by 200 basis points, recognize the seriousness of the condition we're in, maybe they could. Well, certainly the market would look through a hard landing, which is beginning to get baked into the cake. So crypto, very interesting. On the Monday, the morning that the president gave his address, the market started out down, and Bitcoin, I think, got to $19,000. And then all of a sudden it turned around as regional banks were imploding and bank runs were in the headlines. Bitcoin moved from 19,000 to, I think it crossed 28,000 at one point. It's around 27,000 right now. That's an indication that Bitcoin is a flight to safety. And why would that be? Well, unlike our banking system, and unlike FTX and Celsius and 3AC, the Bitcoin network is decentralized. It's the most decentralized and therefore secure network out there. It is the most transparent network out there, and it is auditable. It's pseudonymous, but you can see everything going on out there. There's even a rumor out there that, and this is purely rumor, but one of the government agencies, which has been seizing crypto, I guess, from criminals, has been letting some out now to take advantage of this price move. And you can see these movements on chain. You don't know exactly if that's a government account. But it's so our confidence in Bitcoin in particular and Ether has gone up in here.
CEO and Chief Investment Officer of ARK Invest, Cathie Wood, was amongst one of the first institutional investors to become bullish on and add both Bitcoin and Ethereum to her investment portfolios. In her latest interview, Cathie shares her insights on the current state of the market and why her conviction in both Bitcoin and Ethereum has only grown throughout 2023. As the world continues to grapple with the after effects of the pandemic, and each week we are seeing another bank collapse due to rising interest rates, Cathie argues that cryptocurrencies have emerged as a life raft alternative asset class, offering decentralization, transparency, and an insurance policy to investors. Cathie is of the view that we are heading for a hard landing relating to the Fed's current stance and continued increase of interest rates. She believes crypto offers a way to look past the potential hard landing and the mismanagement of monetary policy by the central banks, and it will emerge stronger on the other side. Crypto has performed exceptionally well during the recent market turmoil, such as the bank runs and implosions of regional banks. Cathie notes that while the stock market started out down this year, Bitcoin actually rose from $19,000 to over $28,000 at one point, indicating that it is now being seen as a flight to safety by many investors. This is because, unlike the traditional banking system and centralized institutions, the Bitcoin network is decentralized, transparent, and auditable. As a result, it is the most secure and reliable network out there. Make sure to stick around to the end of the video where Cathie breaks down her outlook for the rest of 2023 and the next few years, and breaks down what she believes everyone else is getting wrong when it comes to investing. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
So our confidence in Bitcoin in particular and Ether has gone up in here. Why? Throughout last year, when you had the implosions of these centralized opaque institutions like FTX, Bitcoin, the network, and Ethereum did not skip a beat. They did not miss one transaction. They satisfied all margin calls because they're over collateralized ecosystems. And so I keep pounding that drum, saying, "Look, Bitcoin and Ethereum haven't skipped a beat. Look what's happening to our banking system." So, and in fact, I did an In the Know. We call the YouTube series In the Know last it came out last Friday with Art Laffer of Laffer Curve fame, a mentor and friend of mine. And he said to me, it was a soul searching, honestly, it was a brainstorm between the two of us. Normally I'd have this in a phone call, but I figured, what the heck, let everybody hear this and hear sort of the thought process. And Art very interestingly said, you should include uh, cryptocurrencies, at least Bitcoin, in with money, and which is great. Money, M2 is 21 billion, yeah, 22 trillion, I should say, 21, 22 trillion, and Bitcoin is 500 billion. So it doesn't make that much of a difference yet, but it could, and it could solve the velocity problem. Well, the SEC, as Grayscale is showing in court, um, has been extremely inconsistent here. It has approved a Bitcoin futures ETF, which is subject to swaps risk, but it will not approve a Bitcoin spot ETF, which is not subject to that risk. So it's highly inconsistent. And I think the SEC will lose the Grayscale case. They just lost the Binance Voyager case. Binance is being allowed to buy out Voyager assets. And there is another case, yes, the Ripple case. It seems like they might be on the way to losing that as well. So, yes, we do think there's going to be a Bitcoin ETF. We don't, this court case. I think that the verdict, if that's what you call it at this stage, will come out in June, and then I would expect the choice to be put to the SEC. Either you shut down the Bitcoin futures ETF that you approved, or you approve a Bitcoin spot ETF. If it was approved on Gary Gensler's watch, then they'll approve a Bitcoin ETF. If it wasn't, if it came after, then they may not, because the SEC, the Gensler SEC can blame the last SEC for making a blunder. But it's the thing is, even when it comes to what is a security. Coinbase was approved in April of 21, and it had many of what the SEC now is calling securities on its platform, and yet was not asked to register with the SEC as the SEC was approving its IPO. And in that S1 to go IPO, it mentioned staking 57 times, including the risks. So, there's quite a bit of inconsistency at the SEC. A security, I've been saying recently, if it walks like a security and it talks like a security, then it's a security. Well, the definition of a security has not changed since the SEC approved Coinbase with the securities it had on its platform at the time. The 80s and 90s, that was a time of real innovation and excitement about innovation. And then we had the tech and telecom bust, and even worse, the 08-09 meltdown, and then COVID. And primarily because of those first two, we had the investment industry basically moving into risk-averse mode and beginning to depend more on benchmarks, which they really didn't use that much before the tech and telecom bust. And so we have a world which has moved, really has gone passive and is somewhat backwards looking. And if you look backwards at the last 50 years, we have been in a linear growth world. And the only time investors have heard this concept of exponential growth was in the tech and telecom bubble, and that ended badly. And there's a lot of muscle memory around that. The reason it ended badly is because too much capital chased too few opportunities too soon. The opportunities, the dream was right, but we didn't get the cloud until 2006. We didn't get the first big breakthrough in AI, deep learning, until 2012. We didn't get the second big and monstrous breakthrough in AI, uh, transformer technology, until 2017. And the costs of all of these technologies back then were way too high. It cost I think it was $2.7 billion to sequence the first whole human genome in 2003. Now we're down to $200 in a few hours instead of 13 years of computing power. So if you look at our big ideas 2023 on arc-invest.com, you'll see what we think about the next 7 to 10 years. We think that truly disruptive innovation, which is priced in the global equity markets, both public and private, at roughly $13 trillion today, is going to scale to $200 trillion by 2030. That's a 40% compound annual rate of growth. Those are the technologies themselves, right? Uh, and why are they going to do that? They'll probably end up at 60 to 70% of the broad-based benchmarks. They will catch up eventually. And if you were just to use the securities in those benchmarks today and whatever else is left, we think that will be a very sub 7% return. That's been the return, long-term return of at least public equities over the last 100 years. We think it's going to be subpar in the traditional benchmarks as they catch up with some of these exponential, and we would submit super exponential growth opportunities. Please check out Big Ideas 2023 to see what I mean by that. We think that truly disruptive innovation will account for the majority of these indexes.
So, Cathie, what's at the top of your worry list?
The top of my worry list is that the Fed still does not have the plot and is still wondering if it should raise interest rates again. So that's, half of the solution is understanding the problem. The way they've bifurcated this problem is to say, okay, we have tools for financial stability, and our mandate right now, our priority is to control inflation. I do believe we'll be with what has happened, that we will see deflation. Some of it will be bad deflation. Some of it will be good deflation, because technologically enabled innovation is deflationary, highly deflationary. And we can see from electric vehicles and some of these other technologies that they're now getting to a high enough base that they are going to start moving the needle in terms of inflation metrics. You can take the example of electric vehicles. Electric vehicle costs, and Elon's going to make sure of this, electric vehicle costs are going to, now that we're away from the supply chain problems, they will start declining in line with the battery technology and drivetrain technology and the autonomous technology. We think at scale, the cost to take an autonomous vehicle will drop well below where Uber is. Ultimately, at scale, it will be more like 25 cents per mile instead of $2 per mile. So highly deflationary, but huge opportunities, huge opportunities.